What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. Today is a quick portfolio update video. I try to do these portfolio update videos every week. Please don't forget to like and subscribe to the channel. With that said, let's get right into it. This week the portfolio is in the red by almost $4,000. This has been a red week for the portfolio, which is a good thing because it gives us more opportunities to buy more good companies at good prices. In this portfolio, I follow the growth, value, and dividend style of investing, which is I hold a portion of my portfolio in growth companies, a portion of my portfolio in value companies, and a portion of my portfolio in dividend companies. My mission for this portfolio is to generate passive income while also growing in size. Passive income in the form of dividends, which I then reinvest into value and growth and dividend companies, which gives me more passive income and more growth, and then eventually growing it to a size where I can live off of this portfolio and get the passive income rolling into my account and be able to be financially free to get my financial independence, retire early goal. That is the mission for this portfolio, and I show my journey on this channel week to week. Albert Einstein once said, compound interest is the eighth wonder of the world. Those who understand it make it. Those who don't understand it pay it. Make sure you are on the right side of the fence with you understanding compound interest, and you have a portfolio where you can dollar cost average every month and buy parts of good businesses that can later on help you grow that snowball into much bigger and bigger amounts. In this portfolio, I get monthly dividend income from a lot of my companies, and I reinvest that back into my portfolio to buy more great businesses, which then increases the snowball over and over and over and increase the dividend income that I'm receiving every month, which I then again reinvest, and the snowball goes bigger and bigger and bigger. And such is the magic of compound interest, guys. And it becomes even more better when the market is in the red and having a red day, just like this week we are in the red by almost $4,000. So it's a much better opportunity to buy things in the market, because then things are available at a cheaper price and you can build your positions at cheaper prices, and when eventually they go to the right price, your dividend income increases and the growth in the portfolio increases as well. This month so far, I have received dividend income from Target for $23.21. I have received from Johnson & Johnson on September 7th for $33.83, and from JEPI for $41.19. And I have gone ahead and reinvested that back into buying more businesses. So far, almost I have received around $100 this month. Every month I receive around $250 in passive dividend income from my portfolio. All this money I reinvested back. This month I have September 7 was a red day for the markets, and I bought Facebook, I bought Alibaba, and I bought AbbVie, and I reinvested it back. AbbVie I'll be buying more because it was in the red this month and it is available at a great price. It pays out a dividend of 4.74%, which is a really high dividend yield. Plus, it's available at a cheap price this month because of a news surrounding its new drug Rinovac, and that makes it a great buy for this month. And I will be buying more AbbVie. I added Target paid me a dividend, so I will be buying more of Target this month and reinvesting it back into Target, because Target is also a little bit in the red this month. I'm still waiting for my dividend paycheck from Realty Income Corp, which is also a monthly dividend paying REIT, which is also a great REIT. It pays out dividend of almost 4.24% every month. It pays that to you, which is awesome, and it also increases its dividend every 3 months. So that is an added benefit of holding companies like Realty Income Corp or JP Morgan and Chase or Johnson and Johnson or JEPI, because as time goes on the dividend income also increases, so you are getting a pay rise without just reinvesting your money and growing the snowball bigger, and you get a pay rise every 3 months or every year from good businesses. I also hold 2 ETFs in my portfolio, so when I have nothing great to buy and the market is at all-time highs, I reinvest my money into JEPI, which is a monthly dividend paying ETF from JP Morgan, and VYM, which is a high dividend yield ETF from Vanguard. So when there are no good opportunities, I just put money into these ETFs, which also are showing good growth over the years, good growth over time, and they also pay out dividend. That's sweet, stable dividend income from these ETFs, which I can then reinvest and grow my pie even bigger. So this month, the biggest losers in my portfolio, which are in the most red, are healthcare, which is AbbVie and Johnson & Johnson, followed by financials, followed by real estate, followed by industries, which are also in the red by a huge amount. Industries, I have Canadian Pacific and 3M Company. So these are both great businesses, and I will be buying more of 3M this month because it is available at a good price. Also, Target is in the red, so it paid me a dividend as well of $23, which will be going back to Target, and I will be also adding $100 more over the dividend because when I reinvest a dividend into the same company, I try to put more money along with it. Also, while it's in the red, this is a great time to do that. I also deposited $2,700 on September 7th, which was a red day for the markets, and I purchased Facebook, Alibaba, and AbbVie. Facebook I'm purchasing because Facebook, I think it's still underpriced and it should be priced somewhere around $400 to $450 at least by the end of next year based on the earnings and based on the growth that I am expecting from this business. But I will be adding more. Currently, my average price purchase is $296 and it's trading at 376 to $380 right now, but it will be going up because it is a great business, and that's why I'm buying more and more of Facebook. Alibaba is a discount deal. It was available at cheap price. Chinese stocks, they have been beaten down, so I'm trying to build up my positions in them while they are cheap. AbbVie was also down, so that's why I purchased more on September 7. All the three businesses that I purchased, so one was a growth, one was value, and one was a dividend play, and that is what I like to follow for this portfolio. Have some amount of growth, have the value businesses as well, which are available at fair prices, and then also receive that sweet monthly dividend income or the quarterly dividend income, which increases year over year. Today, I'm also purchasing more Apple. I will be adding some more money into the portfolio because Apple was down on the news of the lawsuit between Apple and Epic Games. So I will also be buying more Apple because this is also a great opportunity to buy Apple. It was down by almost 3%. As you guys can see, as we are talking, the portfolio is falling and it's going down in the red. So I will keep an eye out on all the companies that are going down in the red and see which one are the best opportunities and then go after them. In the utilities, I also hold Duke Energy Corporation, which also is going to increase its dividend this year, maybe this quarter, and it's a stable dividend paying companies. Now electric companies, energy companies, they almost have a monopoly. They cannot raise their prices. The government is kind of supporting them, so it's a great stable dividend paying company, which makes it a very interesting add to my portfolio as a dividend play for the long term. Overall, from my portfolio, I have made around $1,937 just in dividends alone, and the growth has been almost $26,485 in just the past 9 months. I started this portfolio on November 17, 2020, and in just 9 months, I have made almost $1,937 in passive dividend income if we leave the growth out. If we count it overall, this portfolio is up by almost 23% in the past 9 months. The biggest holdings in this portfolio are Google, Apple, Facebook, JP Morgan, and Chase, which is a very stable dividend paying bank, pays almost 2.29% dividend yield, and also increases it every year. The dividend goes up, followed by JEPI, which is the ETF also from JP Morgan and Chase, which is a covered call ETF, which pays out you passive income monthly, almost 6 to 7%, which is a great yield. And plus also the growth is very, very nice. I have gone up by almost 7% in this ETF, and not to mention the monthly dividend paying passive paychecks. And one of my favorite dividend paying companies in this portfolio is Home Depot, followed by AbbVie and Target. Now, Home Depot is also going to be increasing its dividend this year. AbbVie is already paying out 4.74%, which is a very sweet dividend income, followed by Target. Target is a high growth company as well as a very well dividend paying company. My purchase price was $185, and so far I'm up by almost 31% in my Target position. The other big winner in this portfolio is Capital One. Now, Capital One is up by almost 76%. I bought it at a time when the banks were beaten down and nobody was showing any love to the banks, which was a great entry point. And that is a great time to build positions when you see a sector or a type of stock that is not getting any love from the markets, and there are short-term fears and people are dumping down the stocks of that company, but you know it's a great business, you have done your research and due diligence. That is a great time to build your position. My purchase point for Capital One was $90. Currently it's trading at $157 and paying out a dividend of 1%. So almost double my money within 9 months, and that is what is a great time to build up positions in good dividend paying, good companies, good businesses at times when it's negativity on the street. As Warren Buffett says, when there is fear on the street, that's the best time to buy. Be fearful when others are greedy, and be greedy when others are fearful. So banking people were get fearful during the past after the COVID crash and during the months of November when I was building up my positions that time, and it has paid me out really, really well. As you guys can see, over the 9 months, the portfolio has been going up. Only in the month of March in 2021, it did go down significantly. The value did go down, but overall, the portfolio has seen a continuous rise in its value, uh, which is amazing to see. This is the growth in the portfolio because we are in a bull market, and the dividend income that we are getting, which is almost close to 2% or $250 every month. So it is great to see the rise in the portfolio and receive that sweet monthly dividend income. That was a quick update on my portfolio, guys. If you like this type of content, please don't forget to like and subscribe to the channel. This is the Frugal Investor, and see you in the next one.